Hi, thanks so much for tuning in. You're watching BQ Prime, and I'm in conversation with DP Singh, the Deputy Managing Director of SBI Mutual Fund. And we're at the launch of what is being called colloquially as the backstop facility for debt mutual funds. It is a momentous occasion. We have spoken about this in the past. For those viewers that are not familiar with how the system works and why it has been put in place, sir, can you please explain what this is?
Thank you, Alex. Thank you very much. Actually, what we have seen in the past, there were two occasions in 2008 also, and thereafter once again when this Franklin Templeton issue came in. We have seen that whenever there is a credit issue in the market, whenever there's something happening in the market in a particular security, the whole industry, the whole investor base get into panic, and they come in hordes for getting redemption. Now there are two things: either to hold the redemptions and tell them that we'll give you in some later date, because as you know, the mutual fund is a pass through this thing, and we have to sell the security to meet the redemption. So it doesn't happen overnight. So there's always an expectation that 10-15% can be happen, and that for that every fund house is ready. And when hordes of redemptions come, and if you stop it, then it creates further panic. So to stop that kind of situation, and what happens then fund houses go out of panic, desperate sellers, and the prices for the debt securities crash, which eventually hurts the investor. Because we are passed through, so if we get the less money, we'll give less money, the yields will go up, so on and so forth. To have a mitigation, have a risk mitigation against such eventualities in future, this facility has been brought in, wherein whenever there is such event where there is a likelihood of any panic redemptions or people coming to get the money back, so this fund has been created. This is always ready. This is like a ambulance is standing on the standby. Whenever if there is an accident, you will be immediately taken to the hospital. It's not like that exactly, but this fund will buy the securities at the market price, not at the depressed price from the fund houses, and provide them liquidity so they can give the money back to the investors.
So the question here about the corpus of this backstop facility, how much is it? And this is essentially created because a certain amount of money was fronted by the AMCs themselves, creating that initial capital. And who can draw? How much can everybody draw?
The formula was made at 0.25% out of the AMC money of the fund, 2% from the AMCs, whatever is the fund is there, 2% of that will be invested in this fund, which will be invested in the securities, in the investable securities, and that return in any case will go to the fund. So there's no, it's a return neutral for the fund houses who are putting money in this, right? It's a skin in the game kind of thing. So you will get the return in any case if you are putting money. So there's no issue that it's not that 2% is going out of the kitty, because we'll buy the units and units value will be embedded in the NAV of the scheme. So there's no issue about that. But this 3,000 crore was on a particular date, on a particular AUM of the industry. But eventually it will keep on, it's a dynamic number, it will keep on increasing. 10% of the total fund size will be put in by the fund houses, and the 90% credit line which has been guaranteed by the government through the Guarantee Corporation. So that will get activated the moment SEBI says, yes, this is the credit event, and within one day we will be activating that, and the money can be given to whosoever wants to sell the securities, whosoever has more redemptions, they can be paid the money out of this fund.
So what is the limit that can be claimed per AMC? Is there a limit?
This is in relation to how much securities they have, and but that exact details we are yet to frame. But it will be first come first serve basis because it doesn't happen that eventually what means is, for example, going back to the Franklin Templeton thing, they were the ones who got the redemptions too much. So now limiting that will not be giving you more than this will not serve the purpose. So whosoever is doing it, they will be getting the details are yet to be finalized, and will be letting you know about that.
As the mutual fund house that is managing this, what is your role? What is SBIM's role?
It's like managing any other fund, right? This is in the AF category. You will have to have a fund manager. This 3,000 crore rupees or whatever the number will be, that fund manager will be taking care of. He will be managing, putting the money wherever they want. If somebody wants to draw the money out of it, so this is his responsibility to create liquidity. Buying securities is like any other fund manager.